Welcome back. I am Pratap here. Today is the 25th November 2024. In this video, I am going to evaluate the performance of high liquidity zones identified in the previous report. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, you please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. Same link I also provided in this video description. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please find the link of our Telegram channel and join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. In the previous end of the day report, we identified 17 high liquidity zones from daily and 75 minutes time frame for our today's trading point of view. And we got good number of trades. The first one is Nifty. Nifty is also identified as stock near the supply zone, daily supply zone. This is a daily supply zone, drop, base, drop. And if you look into this daily zone, we need to fine tune with the 75 minutes time frame. We have a 75 minute zone is available. We have a drop, 3 base candles and again a drop candle. If you look into this 75 minute zone, I didn't fine tune further. That means the structure is not good. So let's go to the 15 minutes time frame. See, the 15 minute structure is very bad. You have a drop, base, rally, again drop. This is looking like a base candle and again a drop. But this is not a valid leg out candle because it's a medium size. So this is again a drop, medium size leg in, and all these are all base candles. And prices are falling from this candle. So the structure, even if you look into this area in the 5 minutes time frame, 5 minutes time frame structure is also very bad. And we know this zone will be violated easily. So that is what happened today, this zone. But if you look here, there is a drop, base, drop and very good follow through candle. And this 15 minute zone is an horizon to this entire daily high liquidity zone. And this 15 minute zone again having a fine tuned 5 minute zone. We have a rally, 2 base candles and a drop candle and follow through candle. And this 5 minute zone is also an horizon, fine tuned 5 minute zone is also an horizon for this daily zone. Of course, I need to draw wick to wick. So from this fine tuned zone, it picked up the order, this entire daily zone is created. So this is the area you need to have a strong institutional order flow. Okay, for the trade point of view, the small adjustment I did here, rally base drop, 2 base candles and drop, slightly risk is adjusted, but today price entered into this area. And it didn't reach this 15 minutes target zone because of this pro gap. Because that is the problem with the pro gap. Order flow is very strong. It will not let easily prices enter into the target. So somewhere you need to fix. At least you have a very big pro gap here. So at least 1:3 RR, it is achieved today. As I told you earlier, any HLQ zone minimum 1:3 RR achieves, it is a successful trade. Because many people, they don't target for this 15 minutes target. They exit at 1:3. Some people will look for 1:5 RR. But minimum RR should be 1:3. And today it gave 1:3 RR. See, because of this gap, all these candles are looking very small. Just hide them, then really you understand the fall. It entered and how sharply it is down. And at this level, it reached 1:3 RR. Okay, why we are giving importance to this 1:3 RR? The reason is 1:3 RR itself has given 7% ROI as per one futures margin cost of Nifty. It gave 7% ROI for for achieving 1:3 RR. That itself beyond our average intraday ROI. Our average intraday ROI is 6%. See, Nifty has given 5,000 rupees profit, which is 7.3% ROI. Achieved 1:3 RR from 5-min supply zone as an horizon to daily HLQ zone. This is the area where we have the real order flow. And moreover, today what happened, this entire area not having proper structure, with a gap up, the prices opened above this fine-tuned 75-minute zone. Because we know this zone will be violated. Even if there is an order flow, still gap up, if it opens, definitely we won't place any orders in either case. But where exactly it got the support? It got the support from this drop-based drop as an horizon to this entire daily high liquidity zone. There you have the real institutional order flow. Lesson 22. We clearly learned these concepts. In the recent time, many successful trades we are getting from this concept. Whatever the concept you learned in lesson 22. Good number of trades we have seen in the recent time. See, 5-minute supply zone as an horizon. This is the one. And a Nifty, 5-minute supply zone as an horizon. 5-minute demand zone as an horizon earlier. There is one stopped out trade, okay, 5-minute supply zone, fine. Fine-tuned 5 minutes demand zone as an horizon. Many trades we got in the recent time. Five-minute supply zone as an horizon, 5-minute supply zone as an horizon. So that's why lesson 22 is a very, very important concept. It is a new concept. People are not aware of this concept. We developed this concept. Okay, so this is about Nifty. It gave 7.3% ROI. And when we got the trade at 11 o'clock. 11 o'clock, 5 minutes candle. Sorry, this is 15 minutes time frame. We got the trade at 11 o'clock, 5 minutes candle, and achieved 1:3 RR in 12 o'clock, 55 minutes candle. Almost 2 hours. Okay, this is a Nifty. And the next one is M&M, Mahindra and Mahindra. This is a fine-tuned zone. Excellent trade. This is also a 75 minutes supply zone. And one more thing, did you observe? Today is a bullish trade. It is a bullish trade. See, bullish day. See how many points? 314 points profit Nifty has given, which is 1.3% return compared to the previous day's close. From that Nifty also, where it is started falling down from this fine-tuned area. At some point of time, Nifty has given you close to 400 points move it has given before today's close. And then it came down 1:3 RR and moved some more. It was moving up. See, exactly it reached 5 minutes and then started moving down. See how nicely our high liquidity zone concepts are working. That is what you need to observe. And moreover, today is a bullish day and many of our supply zones gave short trades and successful short trades. Only one trade is stopped out. Except that remaining all the trades that are executed, they gave successful trades. Look into MMM. MMM is also gave a short trade and give an extraordinary ROI it has given. Of course, your patient may not let you wait up to that point. Why, I will explain. But high liquidity zone's point of view, it has reached 15 minutes target, but definitely we would have exited earlier. Why we would have exited earlier, I will tell you the reasons. But even before that, this is a daily high liquidity zone. Let's go to the daily time frame. So this is a drop, 2 base candles and again a drop. Drop, base, drop. This is the daily high liquidity supply zone identified by our software. And this daily zone is fine-tuned with 75 minutes time frame. Here we have an excellent 75 minute zone. We have a rally, base, drop. This is the fine-tuned 75 minute zone. Inside this 75 minute zone, we have a fine-tuned 15 minute zone. Look into the 15 minute zone. Again we have a rally, 1, 2, 3, 4 base candles and again a drop candle with some gap, pro gap. And the 5 minutes time frame. We have a rally, 1, 2, 3, 4, 5 base candles and a drop candle with pro gap again. And week to week, if you would have drawn, it is a clean trade. And if you would have drawn a type 2 proximal with small entry buffer at the blue color line, what I have drawn, you will get the trade. See, prices today, it entered into the zone. It's not 9:15 candle trade. This is 5 minutes 9:15 candle, but if you look into 1 minute, it's a good trade. So this is morning 9:15 candle. After that, 9:16 candle is also, it opened and then again gave another level. If you miss the trade in the 9:15, definitely your trade you would have picked in 9:16, because many times we avoid at 9:15. Because by the time prices, we place order, prices will reach and it will come down sharply. But definitely it is a nice trade at 9:16 candle. After that prices reached and finally at 15:04 minutes, it reached the 15 target. That means at the beginning of the market, it gave the trade, and almost at the last half an hour, it reached the target. Do you really wait that much time patiently? No. Okay, here I have two goals. One goal is high liquidity zones point of view, how it is working, the concept point of view. Second goal, what is our practicality in the real? Here my interest is how my software is working. That's why software performance every day we are evaluating. But for your point of view, your trades are important. practical way where you might have exited. Why we won't wait till this? The reason is same. Again a pro gap. Previously we discussed Nifty. The same is the question here also. At 5 minutes time frame, 15 minutes time frame. See here you have a drop, you have base candles, 4 base candles, and a rally candle with hidden body. Okay, it reached the target today, but many times what happens, prices may not reach up to this target. Okay, it reached the target means our high liquidity zone concept worked very well, HLQ zone concept. That's okay. Software point of view, it is a very successful trade, no doubt in that. But practically, do you really dare to stay up to here? No, because there are higher chances price reach here and again it will move up. And this zone might be violated also. Many times it will happen when pro gap is there. Sometimes it will reach target. So that's why practical scenario what we are taking, wherever the gap is there we will mostly exit. That will be our target. So this is practical scenario I am talking. But according to high liquidity zone, this is the target reached. That is my software point of view, I do calculations. But practical point of view, when you take the trade where mostly you might have exited, at this blue color line you might have exited. Still you would have got a huge profit. Even if you exit at this blue color, probably you would have got around 14 or 15,000 rupees profit you would have got. Maybe around 14% ROI you might have achieved at this blue color line. Why we are exiting? Because there is a gap. Pro gap is there. Prices mostly before reaching the pro gap, the order flow may push the prices up if the order flow is very strong. There is some order flow institutions kept, not very strong. That's why it was moving some, but finally it reached. It consumed, the supply consumed all the demand and reached the target before closing the market. But many times prices will start moving again from here and finally this zone might be violated. Or it may give you again a second trade opportunity also. Anything will happen. That's why mostly we will exit here. This is the practical scenario. Okay, fine. What about high liquidity zone? Because it reached this 15 minutes target, definitely it could have been a huge profit for the zone performance point of view. So high liquidity zone's point of view, till 15 minute zone, it has given 21,393 rupees profit. If anybody hold it, you are a lucky guy. You would have captured huge profit. How much? 20% ROI on your investment. Based on one futures margin cost, you would have got 20% of your margin amount you invested. It is an extraordinary profit. But anyway, mostly we might have exited at this, the pro gap where it is getting started. By the time itself, we would have got around 14,000 rupees or something, which is 14% ROI. Okay, this is about M&Up. Excellent trade. Because first time it is reaching, maybe some of you might have, some of you might have added type 1. This is also within your risk management, within 2%. Type 1 proximal is also there. Maybe some of you might have taken a clean trade without any entry buffer also. But those who fine-tuned at type 2, definitely you need to use entry buffer, the blue color line. There also it reached. The prices went a little above the blue color line. So either way, whether you are using type 1 or type 2 proximal with the entry buffer, you would have got a successful trade and a very good profit. So this is about M&M. 20.2% ROI it has given. Next one is ICICI Prudential. It gave 2 trades today. 2 successful trades. Where is this is a prudential. Yeah, here. This is a 75 minutes high liquidity zone. This is a rally, 3 base candles and a drop candle. This is the 75-minute zone identified by our HLQ software. And this 75-minute zone is fine-tuned with 5 minutes time frame. Sorry, 15 minutes time frame. In this 15 minutes time frame, here you have a drop candle as a leg-in, you have a base candle. This failed ERC you can use as a leg out because it is a huge candle, that is one thing, and body also came out of the zone and moved out of the zone. That is the another reason we can consider this as a leg out. Drop, base, drop. So this is the fine-tuned 5-minute zone. And if you look into 5 minutes time frame, you will find the exact order flow, not within this fine-tuned area. Fine-tuned area, 5 minutes order flow. See where the candle is closed. The candle is closed inside the zone. You can't use this as a leg out candle. You have a drop, base, drop. This is outside the zone. You can't use it. This is not a fine-tuned zone. Easily these kind of zones will violate. So that means within this 15 minutes area, we don't have proper order structure. But institutions cleverly placed the order where rally, base, drop as an horizon to this entire fine-tuned 15-minute zone. Here the actual order flow. From this horizon, this entire candle structure is formed. And previously when it is on last Friday, once again prices reached in this area and again see how sharply. And today also it entered into this zone. If you would have taken a trade, but here slightly pierced, that means in this area consumed entire order. Then see again from this, after reaching distal line, sharply prices came. Because there is a gap up, there is a open with a gap. Mostly you will keep this blue color line, the gap area you would have kept your target, and until this blue color line 1:4 RR is there. Why this blue color? This is the area gap, the gap. See previously also I told you the practical scenario, M&M where the gap is there. From there you would have kept your target. Exactly the same way here also. Because today market opened with the gap. And go to 1 minute time frame, you get better clarity. See, market opened with the gap today. This is the area from here to here. Already you have 1:4 RR is there. And today prices, you got an entry here morning, 9:15 candle. Mostly you miss this trade, 9:15. But 9:16 candle, definitely you will capture this trade. But slightly pierced. Because it is, anyway, if you would have taken a trade, you have to wait. It did not hit the stop loss. Then prices sharply came down and reached this blue color area where we kept the target. From here to here, already we have 1:4 RR is there. If 1:3 RR is achieved, it is a successful trade. After that again prices reached, you can't take trade this time because this zone is already pierced. Once a zone is pierced, it is not allowed to take a trade. But earlier you already took the trade. After that zone is pierced. So you are within the trade. So you have to hold until either it is stopped out or it reaches the target. And luckily today it reached the target, that way it gave a trade, successful trade, even though it is pierced slightly, because we are within the stop buffer. And after that you can't take next trade because this zone is violated. Pierced earlier. But it gave another trade opportunity, that is our lesson 22 concept. Here you have a 5 minutes zone as an horizon. So here drop, base, drop. This 5-minute zone is the origin for this entire 75 minutes high liquidity zone. So from this area, earlier it picked up the orders and this entire zone is completed. And today, first time after zone creation, first time in this area, the 5-minute zone as an origin, prices entered. It gave you a trade here. But the problem is today, prices went deep inside, near to this digital line. And then again prices came down. And reached this 15 minutes target. Okay, but what is our practical scenario? Mostly in this blue color line, you would have exited. Earlier also, first trade also see, because there is a gap. See here, so much of time during the day, prices were moved within this area. Because of this gap, pro gap, a lot of order flows institutions might have added. Why we are saying pro gap? Because this gap is formed when prices are moving away from the zone, not towards the zone. If the gap is towards the zone, that is the novice gap. This is a gap is formed while prices are moving away from the zone. Okay, anyway, mostly many of you might have taken a trade here and exited here. But it finally reached the target during again last half an hour of the market, when it reached the actual target at 15.5. Okay, high liquidity zones performance point of view, it reached this 15 minutes target. But our practical point of view, mostly you might have exited your trade at this blue color line. Maybe it might have given you around 6% ROA or 5.5% ROA till this blue color line. But according to the high liquidity zones, it reached this 15 minutes target zone. Till this 15 minutes target zone, it has given 8.7% ROA, which is 8,137 rupees profit. So this is another successful trade from 5 minutes zone as an origin to this entire high liquidity zone. See, earlier also we took the trade at this origin, even first trade. But what is the difference between this origin and this origin? This origin, 5 minute zone origin, to this fine-tuned 15 minute zone origin. But this is 5 minute zone is the origin to this entire high liquidity zone. So here even more strong order flow might be there. But today demand is also very strong. See, until near to this digital line, prices were moved and then started going down. If some more prices would have gone up, maybe your stop loss would have been triggered. But anyway, before entering into this, at this digital line onwards, prices are started moving down and finally reached 15 minutes target. But practical point of view, this pro gap area, the blue color line what I have drawn, many of you might have exited at this area. Okay, anyway, because it reached 15 minutes target, till the 15 minutes target, it has given 8.7% ROA. This is the 5 minute supply zone as an origin to 75 minutes HLQ zone. Okay, this is about ICICI Prudential Bank, and one stopped out trade is from Naukri. Naukri is a daily zone, daily supply zone. Here we have drop. I think this is the drop. 1, 2, 3, 4 base candles and drop. This is how our software is identified. And when I fine-tuned, we have a 75 minutes fine-tuned zone here. We have a drop as a leg in, 3 base candles, and again a drop. Within this 75 minutes area, we have a fine-tuned 15-minute zone. Have a rally, 3 base candles and a drop. When it goes to the 5 minutes time frame, the 5 minutes time frame structure is not good. But here you have a drop base, a drop is there. This is the 5 minute zone as an horizon. Definitely this is the area we can plan our trade. But this 5 minute zone is the horizon to this fine-tuned 75 minute zone. Of course, fine-tuned 15 minute zone also. And many times these zones will work, give very good result. But today, unfortunately, that area is violated. We have to accept the stop loss. Because this is the first time. Definitely we need to register. See, if it is second time or third time and zone is violated, we would not have cared that. Performance point of view. But at least first test it should give. First test is failed means definitely it is a stop loss for our performance evaluation point of view. We need to consider that. This is the first time entered into the zone, zone is violated. The prices are within the zone only. But this fine-tuned 5 minute zone as an horizon to this 75 minute zone is violated. So that way Naukri has given 791 rupees loss, which is a minus 0.6% ROI. The negative ROI is 0.6%. Very small. And there are few more zones also violated. One is UPL. But UPL is already tested the zone. The 5 minute zone is tested and today second time. Previously we got a good profit from this zone. This is the 75 minute zone. And this 75 minute zone is having a 5 minute zone as an horizon. And previously we took this trade. It gave a successful trade previously. Here you see you have a drop, 2 base candles and a drop. This 5 minute zone as an horizon to this entire 75 minutes high liquidity supply zone, and the prices reached this horizon, gave an entry here in this candle. This is on 7th November. If you look into our Excel sheet, 7th November, this is 7th November, right? Yeah, here. Sorry, always I am looking into the wrong column. This is the zone creation date, our report date. This is the actual live market date. Previously also I made this mistake, sorry. So this is on 7th November. See here, UPL gave a trade on the live market. Short trade. That day it has given 7.6% intraday ROI. See, after that again the fall continued. If anybody would have holded this, they would have got even more huge profit up to here. This is 13th November. Now then prices are started moving, and today again second trade it gave, but it is violated. If you would have taken the trade today, definitely your trade would have been stopped out. So that is what the HLQ zones concept, and this is a 5 minute zone as an horizon. We need to take trades as many times as possible until it is violated. See, one day it will be having expiry period. Today it got its expiry day. See, institutions here, they created a new order flow rally, base rally, and they decided maybe whatever, because earlier already it picked up some trades. Still the order is strong. See here today, already prices went, picked up, came down. Institutions, now they added a new order flow rally, base rally with 15 minute zone, 5 minute zone, and finally this zone is violated. Probably you may see some 15 minutes zone also here. See here, ERC candle, this is a 15 minutes candle. You have a drop, base, rally, and the zone is violated. Okay. So this is another UPL, but still I am not, see, I'm not, I don't know, you might have observed or not. Second time onwards, see, HLQ zones are, as many times we have to, if there is a successful trade after that, one day it has to fail. We don't know when that, probably today. But why I am not really concerning about this stop losses, because here already we got a very good profit, a successful trade. If it is first time today without this previous trade, if this is the first time, definitely I have to register in my logbook. That is HLQ zone performance point of view. Please remember, I am not talking about my trades or your trades point of view. HLQ zones point of view, how well these zones are working. That is what I am tracking in the Excel sheet. That is what you should understand. These are not my trades. Several times I told this point. Even in Q&A sessions, if you have gone through, I already explained that in the Q&A video, one of the Q&A videos. These are the performance of our HLQ zones. Why continuously I am monitoring this performance? Because this is the area we have the real order flows we are able to find that is giving good profits to us. HLQ zones and 5-minute zone as an horizon to the higher time frame zones, they have very strong order flows, but we never know when they will be violated. We never know how many times they will give successful trades. That's why what is the rule? Keep on taking the trades. Suppose your first trade is successful, you already earned good money. Second trade, many times it will be successful. Third time also might be successful. Maybe fourth time it will be violated. Sometimes third time will be violated. Second time. And sometimes second time will be violated. That is what happened today. So is it a loss? No, not really. Because already it gave you good profit here. High liquidity zones point of view. If you miss the earlier trade and you took a trade today and if it is stopped out, definitely you suffer. You took the earlier trade, you got a good profit, and today again you took the trade, failed. Anyway, you don't bother. Because you got a good profit, already you captured good money. And whatever the loss you get here is very nominal. You won't consider at all. So that's why my recommendation to everyone, high liquidity zones or lower time frame zones, take as many trades as possible. But make sure your first trade is successful. That is important. If you miss the first trade and if you are planning second trade, it is quite risky for you. Always we need to observe these kind of zones. Whenever we get the opportunity, we should grab the opportunity. Next time, even if you hit the stop loss, you won't be worrying. So that's why high liquidity zone performance, see, if you might have observed, every time as many as a trades it is success, getting success, we are capturing in our Excel sheet. But the day when it is violated, we are not really bothering about that. Because earlier so many trades, successful trades it gave. But if it is the first time, we are capturing. That is what we did in Naukri. Naukri today is the first time. This is the 5-minute zone for the fine-tuned 75 minutes, 15 minute zone. 15 or 75 minutes. See Naukri. Today first time prices entered into that zone. So this is the 5-minute zone as an horizon to this fine-tuned 75-minute zone. But today first time it entered. Today it is violated. If it is second time or third time, we would not have bothered if this zone is violated. But today first time. First time failed, we have to capture because it should be there in our logbook. That is what happened. Today first time it is violated. It is a real loss. Because earlier you didn't get any profit from this zone. So this is UPL is the one we discussed, and another one is Reliance is also, zone is violated, but we didn't consider. The reason is it opened with a gap up. See, maybe institutions might have, there is very good order flows are there, Reliance. Maybe institutions might have cancelled all their order flows. That's why with so easily with gap up it has moved up. Why institutions might have cancelled, we don't know. Maybe there could be some news about the Reliance. But we technical analysts, we don't really bother about that. But anyway, it is not a stopped out trade. The reason is with the gap up itself, in the pre-market itself, with gap up, price moved above that. So before our market starts, the zone is violated, you won't place any orders. So there is no question of stopped out. Because before placing itself, the prices are above the zone, opened with gap up. But it had good order flows are there. That was the great, that too, two order flows I observed. Look into the, first of all, this is a 75-minute zone. Rally, base, drop and follow through candle. And it is having a 15-minute zone, two 15-minute zones. See here, we have a drop, two base candles and drop. And again you have a drop, 1, 2, 3, 4, 5 base candles and drop. If you go to 5 minutes time frame, see you have excellent structures. So drop, 3 base candles, drop. Here also you have a drop, 2 base candles and again a drop and follow through candles. So definitely one of these zones should work. But market what happened? Opened with gap up. Why these order flows did not stop this? Maybe institutions might have cancelled these order flows. That's why otherwise price won't move so easily like this. The question is why institutions cancelled? We may not be knowing. Maybe there could be some news in the market. If anybody know any news about Reliance, please put in the comment section so that other people also will at least know what is happening in Reliance. Volumes also see, huge volumes today. Especially the last half an hour or 1 hour of the market before market closing. Even today morning also, there is a huge volume here. See here. Okay, anyway, this is not a stopped out trade for us because before placing itself, market opened with gap up. There is one more zone is violated. That we know because lesson 16 concept, when a zone will be violated. What is that? Is it conquer? Yeah, this is the one. Drop base drop. This is the 75-minute zone. This is fine-tuned with (15 minutes) time frame. We have a rally, 1, 2, 3, 4 base candles and a drop candle. Until here it looks very nice. Now go to the 5 minutes. See the structure in the fine-tuned area. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All candles are within this area. See the price action. Such kind of price action always violates the zone. This indicates consolidation in the market. A lot of consolidation took place here. Buying, selling, buying, selling. You won't be having any institutional order flows when prices are moving in a flat for so much of, with so many candles. Of course, prices should move in a narrow range. That is the main basic principle of supply-demand zone. But the movement should be limited to less than or equal to 6 candles, not beyond that. Beyond that indicates a consolidation in the market. and institutional order flows, mostly all their order flows are already executed. Pending order flows are very, very few, and such kind of zones will be violated. See how easily zone is violated today. Morning 1 minute candle itself, it is violated easily. See, market opened here, it opened with gap up, but below the zone, and within that 1 minute zone, sharply prices moved up. And we already guessed this zone will be violated, because this is the concept what you learn in lesson 16 when a zone will be violated. And the remaining zones, there are no entries. Even few zones prices entered, but they didn't enter up to our fine-tuned areas. Let us look into the remaining stocks quickly. Aarti Industries, already I told you, this is a daily zone, and there was a demerger, and this price structure is not proper in trading view. We are ignoring this stock. And next one is Dalmia Bharat. This is also a daily high liquidity demand zone. We have a fine-tuned zones. Prices today, price did not enter. How I fine-tuned? Go to the 75 minutes time frame. Here you have a 75 minute zone, drop, 2 base candles and a rally. Here I planned aggressive trade setup. For that I have drawn, this is a 5 minute zone. And here in this area you don't have any 75 minute structures. Okay, within this 75 we have 15 minute zone is available. We have drop, base, rally and follow through candles. Within this 15 minutes we have an excellent fine-tuned 5 minute zone. We have ERC candle as a leg-in, you have a base candle, rally candle, and excellent move from here, and after that prices again entered into the zone, picked up the orders, and see how sharply it moved. So can we plan a trade next time? See again here in the same area it looks like a drop, base, rally and follow through candles are created. Generally if it is a high liquidity zone, such kind of price action will take place. So that way there is nothing wrong in planning again another trade within this area. Or a little above here, somewhere here, until here you can keep your stop loss. That way you can plan your trade. But my interest is there is a aggressive trade setup and multiple times the prices entered into the zone. So closely I am monitoring on this zone. We have a drop, base, rally. See prices again came, picked up the orders and sharply how they moved up and gave a big move after that. So definitely there is a strong order flow might be available, but confirmation next time again prices once again they entered into the zone and sharply it moved again here. Third time they came very near to the zone, didn't touch but came very near. Maybe there could be a strong order flow might be there. That's why I'm focusing on this zone. Maybe planning as an aggressive trade setup. Sometimes institutions cleverly place aggressive trade setup related zones. They are not fine-tuned. We have to identify with the help of some price action clues like rejections, sharp rejections before the zone, or multiple tests like high liquidity zone, could be high liquidity. And such kind of zones will give you multiple trade opportunities. So if this 75 minute zone is violated, probably these institutions may use this zone as a trap, bear trap. Because the 75 minute zone is violated, stop loss will hit, people will exit, and here from this zone institutions will keep on capturing all the orders and again push the market up. And we think our stop loss is violated. But after we exited the trade, prices will be moving. That is the way people will complain. But there are traps institutions keep. You already learned in lesson 21. Bull trap and bear traps. So this may act as a bear trap. and also supporting aggressive trade setup. And already having couple of tests, and the third time prices were moved a little above. Maybe institutions may be creating some setup for the future trading point of view. They may use this as a bear trap, this 5-minute zone. Okay, that's why I have drawn this zone and monitoring, but anyway today prices didn't enter into this zone. At present prices are moving away from this zone. See, this is a today's candle. But we have some learning from this particular zone, how institutions are creating the setups to understand their. See, always you need to observe institutions' mindset. If you are able to understand what they are trying to do, then your trade plans will be much accurate. Just blindly what you learn in supply demand zone, that way you are drawing the zones, that doesn't help you. That is only at the initial stage. Once you are getting experience, you have to think what could be institutional mindsets. You should think like an institution. If you are an institution, how you want to trap the retail traders? That way you have to think. You have to get into the shoes of the institutions and start analyzing the zone. Then your analysis will be perfect. There could be so many other 5-minute zones which are not fine-tuned zones. Why I am leaving all those zones? Why I am focusing only on this? Because I found some reasons why I should focus on this zone. What could be institutional mindset? That is the way I am thinking, and I drawn this zone. This is how you should prepare your trades. Your trade planning is very, very important. Next one is AU Bank. This is also a daily high liquidity zone, supply zone. And today, I think previously I explained this zone, drop-based drop. We have a fine-tuned 5-minute zone, not fine-tuned. We have a 5-minute zone as an horizon to this entire daily high liquidity supply zone. There we are planning our trade. This 15-minute zone is not having a proper fine-tuned zones. That's why limited to 15 minutes. I already explained in the earlier videos. Please refer to that video. And a Bosch. This is also drop, base, drop. So here you have a fine-tuned zone. We have a 75 minutes time frame zone is available. See, you have a rally, base, drop, and follow through candles. Nice zone, 75. In that you have a fine-tuned 15-minute zone. So here you have a rally, base, drop. From there prices are going up, and again went down, again went up, again went down. In this process, here I found a fine-tuned 5-minute zone. Go to the 5 minutes time frame. In the above, the structure is not good. See, all these structures are, all these are all ERC candles. There are no base candles. But here institutions created a drop, base, drop, some small pro gap is also there here. Previously price entered into pro gap area, and see sharply it came down. And here also prices were trying to reach, but again it pushed. Maybe in this area the order flows are very strong. That means the zone order flow might be very strong. But unfortunately, prices did not enter into that area. And next one is Grasim. This is also a 75 minutes high liquidity zone. I think Grasim I explained earlier. This is a daily zone. We have a rally, base, drop, and it is having a 75 minute zone here. A rally, 2 base candles, and a drop. Again it is having a (15-minute) zone here. We have ERC candle as a legging, 2 base candles, and then follow through candles. But 5-minute structure is not there within this area. But instead here we identified this can be used as a drop hidden body. At the hidden body, this is a drop, 2 base candles and a drop. Already once tested. Again a rally based drop is created from this zone, indicating LOTL, maybe strong order flow might be there. Second time, during this entire daily zone creation, it picked up the order, daily zone was created here. And again, prices went into the zone and again sharply came down. So that is the area we want to plan our trade. But today prices came near to this zone, not very near. So definitely after adding an entry buffer also, your trade won't be executed. And moreover, this is a morning 9:15 candle. The 1 minute 9:15 candle also the same. See? Morning 1:59 candle. But prices went near to this. Maybe next time again you get an opportunity, you have to make use of that opportunity. So this is about Grasim and the M&M we discussed, and the MCX. We have a rally, 1, 2, 3, 4 base candles and drop candle. This is fine tuned with 75 minutes time frame. So here we have a rally, 1, 2, 3, 4 base candles and a drop candle. This 75-minute zone again fine-tuned with 15 minutes time frame. In the 15 minutes time frame, we have drop, 5 base candles and again a drop. Prices went and came down, again went and came down. So who is controlling the prices here? The 5-minute zone as an horizon. Go to the 5 minutes time frame, you get clarity. Here you have one minute zone, not 5 minute zone, I think 1 minute. Previously I explained MCX. 5 minute zone clarity is not there. I went to the 1 minute time frame. Here you have a rally based drop, and this is holding, currently working like a high liquidity zone. So that I already explained, I remembered, because this is what I fine tuned. This is already previously drawn zones and discussed. Apart from that, there is one more 5 minute zone. We have a drop, 1, 2, 3, 4, 5 base candles and again drop. So this is again acting as a 5 minute zone as an horizon to this entire 75 minutes fine tuned zone. But anyway, today price did not enter into this zone. Next one is Muthoot Finance. Muthoot Finance is a daily high liquidity supply zone. So this is a rally, ERC candle as a leg-in. You have 1, 2, 3, 4 base candles and drop. And this one is fine tuned with 75 minutes time frame. In the 75, you have a rally, you have 1, 2, 3, 4 base candles and a drop candle. So this 75 minute zone should be fine tuned with 15 minutes time frame. So 15 minutes time frame, we identified one drop, 1, 2, 3, 4, 5 base candles and again a drop. And this 15 minute zone again fine tuned with 5 minutes time frame. And here also I think 1 minute zone is drawn. I think I have drawn 1 minute zone MCX, because 5 minute structure is not clear. Rally based drop, and above again you have 5 minute zone. What MCX is this is a MCX, not Muthoot. How MCX? It is not loaded. Muthoot is not loaded. Sorry for my mistake. Muthoot is not loaded. Now it is loaded, I guess. Yeah. I was explaining a wrong one. MCX already we discussed. That's why I'm wondering again. Same previous discussion, how it came, I'm wondering. Okay. Muthoot is a drop, is a rally base drop. This is a daily zone. This is an LOTL zone. Previously we discussed this zone. From this zone again a rally based drop LOTL zone is created, and this is identified again by our software because this is the nearest one compared to this zone. But because previously we have drawn, this zone is there in my chart. This is another daily zone. It has order flows, this zone. This one we discussed earlier. This is a new one. It doesn't have a proper order flow. Anyway, today price did not enter. It didn't have. Why it didn't have? Let me show you. See here you have a ERC candle. You have 1, 2, 3, 4 base candles and a drop candle. If you look inside, the structure is not good. So this inside structure is not very good. Lot of consolidation. Mostly these kind of zones will be violated. So that's why this entire LOTL zone will be violated. Probably prices will go to the fine-tuned zone, what I explained in the earlier discussions. Anyway, today price did not enter into the zone. Next one is Naukri, we already discussed, and Wipro. And Wipro is a zone created in the year, it's a old zone. When it was created in 2022, I can fine tune up to 15 minutes level, and previously prices entered inside. Maybe there could be some 5 minute zone is available, fine tuned 5 minutes. It could have been tested earlier. See, prices went, and today this zone is violated. But anyway, we can't plan this. We can't plan without 5 minute zones. And next one, 75 minute zone, MFSL, Max Finance, we discussed it, right? Yeah, previously I explained this zone, how I fine-tuned it. It doesn't have any fine-tuned 5 minute zone. And prices came here and moved up. The analysis I already explained. Today we didn't get any trade opportunity. Moreover, we didn't plan any trade here. But it is having a 5 minute zone as an horizon. This is the one I explained earlier. You can plan only trade in this area. And NMDC, last class we discussed, last session we got a trade also. It has order flows. When we got the trade on November 24, Thursday. We have an horizon. From the horizon it picked up the orders and prices were moving up. While moving, many order flows were created here. I have to explain those order flows to you. We have a ERC candle as a leg-in, base and rally follow-through candles. And here again drop, 2 base candles and a rally. And within these 15 minute zones, we have the real 5 minutes order flows are available. See, this is the ERC candle as a leg-in. You have 1, 2, 3, 4 base candles, rally. And here also you have an order flow. This is the leg-in, you have a base and rally. So in these two areas, we have order flows, and below anyway the 5 minute zone as an horizon is available. And this one already gave one trade on 21st November. 21st November, let us check. NMDC gave a long trade. 23,000 profit, 8.3% ROA. NMDC. This was the candle that gave a trade on that day. After that, see how sharply it moved. And while moving, this order flow is created. And again, at the market closing, again another zone is created here. Okay, anyway, this is today's price action outside the zone, so we didn't get a trade opportunity. Concur we discussed, and ICICI Prudential it gave 2 trades, we discussed, Reliance we discussed, UPL we discussed. So this is about the high liquidity zone, 17 zones created on last Friday, end of the day market. I wish this information will be useful to you. Let's all meet again in our next video. Thank you.